Hi, I'm Stock Investor Davis. Welcome to the channel and please subscribe. Let's take a look at Supermicro. We'll start by looking at its technical chart, assessing its current stock price compared to my fair value range, both today and projecting out to its fiscal year end, followed by some insight into how I arrived at that fair value range, then a look at its projected income statement, comparing what's been provided by management to what the analysts are currently projecting. Finally, closing with a news portion, highlighting some headlines for the company over the date range shown. Starting with the end in the beginning, we have Supermicro's technical chart. The items of interest for now are the green and red boxes indicating the low and high points of my fair value range, respectively. Also, the green and red lines connecting the boxes to show how I anticipate the stock will gradually move into its next quarter's projected fair value range. With that out of the way, the price points I'm looking at today are $765, the bottom of my fair value range, $957, the adjusted bottom of my fair value range, $1,023, the top of my fair value range, and 1,266, the adjusted top of my fair value range. The range between 765 and 957 is my sweet spot for the company and where to me it makes sense to buy. The range between 1,023 and 1,266 is the alternate sweet spot for this company and where to me it makes sense to sell. That said, this company is in an uptrend and I'm forecasting the uptrend to continue. Therefore, you may not want to sell. It'll be up to you. To close this portion, we look forward to its projected fiscal year end, June 30th, 2024. Based on management's guidance and my own estimates, I'm projecting that the stock price will be primarily trading between $1,062 and $1,417 during August through October of this year. I realize a lot can change between now and then. Therefore, I'll be mindful of any updates and make adjustments when necessary. Pivoting to the valuation explanation for the stock price today and looking forward, here is a summary of how I arrived at my current fair value range between $767 and $1,023. I'm using a price to earnings multiple of 60 to 80. This range has been determined by using company comparables, including Tesla and Amazon, which have similar margins and high revenue growth projected. For greater detail of how I arrived at these comparables, watch the video link in the description. This multiple range has received some confirmation from the market based on its current trading range this quarter. Finally, to see the stock trading near $900 today, that equates to a PE ratio of near 70. To me, this price is neither favoring the buyer nor the seller as it's in the middle of the range. Looking ahead to Supermicro's projected fiscal year end for June 30th, 2024, I'm using that same multiple, 60 to 80 multiple range, and applying it to the projected earnings per share of $17.71. This figure is based on management's guidance of between $14.3 and $14.7 billion in revenue, estimated shares outstanding of 61.6 million, and estimated net income of $1.1 billion. With these assumptions, which we will cover in greater detail shortly, I arrive at a fair value range of between $1,062 and $1,417. With this projection, the current price of near $900 today equates to a PE ratio of about 51, highly favoring the buyer. I'll make necessary adjustments to this range as more information becomes available. Wrapping up the valuation portion, as a quick summary, I have a side-by-side comparison of that current fair value range on the top and the projected fair value range for the company's fiscal year end on the bottom. Let's shift to what the analysts are projecting and compare it to what management has stated, along with my own judgment as needed. On screen is the analysts' projections as of April 12th, 2024, for Supermicro's earnings and revenue. I note the earnings projections for the upcoming quarter of $5.84, the quarter after of $7.19, and the full fiscal year of $22.10. Additionally, revenue projections of $4.01 billion for this coming quarter, $4.91 billion for the quarter after, and a full fiscal year to be $14.66 billion. With that information, we can compare it to management's guidance with some of my own judgments. We're focusing on these columns here. The items highlighted in blue were given by management. In green are my own estimates, considering management's guidance. And in yellow is the analyst figures. Focusing on the revenue projections, these amounts are all within reason for the upcoming quarter and out to year end. For the upcoming quarter, we forecast $3.9 billion compared to the analysts of $4.01 billion. And for the fiscal year end, we forecast between 14.3 and 14.7 compared to the analysts with 14.66. So all within reason here. Moving down to its net income and earnings per share, this is where our differences begin to surface. In the upcoming quarter, we forecast $321 million in net income and $5.22 for earnings per share, compared to the analysts' estimated $360 million in net income and $5.84 for the earnings per share. Then for the fiscal year, I'm estimating net income of $1.07 billion to $1.12 billion for between $17.31 and $18.11 earnings per share, compared to analysts projecting $1.36 billion in net income and $22.10 earnings per share. The large scale difference between the two year-end projections is likely being driven by the shares outstanding count that I'm using of 61.6 million. This is estimated to be the current shares outstanding for the company's upcoming quarter, given the recent stock deals with the U.S. Bank Trust and Goldman Sachs. This share count is believed to be conservative and will likely be lower in its fiscal year end calculation, as the actual reports will be using the average of the 4 quarters rather than the current count that I'm using. Of course, we'll see how everything progresses as time passes. Our final section, the news portion, showcasing the headlines that caught my attention since the last update. First, Supermicro was announced to join the S&P 500 effectively on March 18th. Next, the company registered an additional 1.5 million shares under its equity and incentive compensation plan. I imagine this was due to its convertible senior notes with US Bank, discussed in a previous video. Additionally, a company board member is stepping down in order to focus on family-owned business projects. Further, this was not the result of a company disagreement. The person was part of the nominating and corporate governance committee and the audit committee. Then Bank of America upgraded its price target to 1,280 from 1,040. Next, Supermicro officially joined the S&P 500. Also, Supermicro appears to have expanded its manufacturing capacity to 5,000 racks per month. This is per the CEO. This detail is mentioned within an article discussing the dynamic of combining NVIDIA's latest products with Supermicro's setup. Based on the timing, though, of this expansion, while it's expected, it just seems a little bit early, so I'm going to be looking for confirmation of this detail at its upcoming earnings call. In addition, Supermicro is prepared to be the first to market with some of NVIDIA's latest products. I point this out because of all the aspects of this industry, this timing of first to market seems to be a competitive advantage for the company today. Shortly after, Supermicro announces a 2 million stock share proposal with Goldman Sachs as the buyer. The proposal was for $1,000 per share and includes a 300,000 stock share purchase option, followed by the actual pricing of the stock offering, which ended up being $875 per share rather than the $1,000 per share in the proposal, ultimately resulting in Supermicro receiving $1.75 billion before underwriter deductions. This money is expected to be used to support current operations, including inventory purchases, capacity expansion, and R&D investments. This item is a surprise to me because the company only about a month ago arranged a deal to receive $1.5 billion stating similar uses. That's $3 billion of cash received this quarter from outside funding. I'm excited to see how this all translates on its next quarter's earnings report. Finally, JP Morgan has initiated coverage in Supermicro with a price target of $1,150, explaining that its valuation is based on the projected gains supported by ongoing leadership in the market, driving revenue and profits higher. Its optimism is driven by the expected increases in the AI server market, estimated to expand from $41 billion in 2023 to $283 billion in 2028, resulting in a 43% CAGR between 2023 and 2028. Also estimating Supermicro will have conservatively 10 to 15% of the market. This suggests the company's 2028 revenue could reach $40 billion. For comparison, the company had revenue of $7 billion in 2023. It's currently projecting between $14 and $15 billion in revenue for 2024, and some analysts are projecting as high as $25 billion in revenue for 2025. Based on this type of growth, $40 billion appears achievable to me. That concludes this video. I hope you enjoyed. I hope you learned something. Leave me comments below and remember to subscribe.